Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So next question, same guy, Rama. Thanks. I'm glad that you've got a lot of questions. As you indicated, VIX is at all-time high. VIX next move is down. Do you expect the USD also to follow VIX? My experience with the US dollar is that it lags the VIX. So if the VIX were to, in fact, begin to peel back and not only beat that 50 level, but get into even the 30s, which I'm sure will happen eventually. It's a question of when. I would anticipate the dollar start following that and probably lagging it. It's something I would pay very close attention to. It's not something we want to look at in a vacuum, but typically the dollar kind of lags the VIX by, or has been lagging the VIX over the last couple of years by a few weeks. So that's one thing that I would expect the U.S. dollar to weaken a little bit if we get the VIX starting to come down, because traders will just be naturally trying to diversify their assets a little bit, and that will probably mean a shift out of U.S. dollar-denominated assets, bonds, and such.
Hey, John, I got a question for you, Steve.
Yeah.
Long-lasting effects. Do you, you were talking about crisis management, and initially, I guess early on in this crisis, we were seeing each country trying to do their own thing. Then we saw some coordinated thoughts, and then now it seems like it's back because every country obviously has a different governing system on how they would actually get the capital and stuff. People are, each country is looking at things a little bit differently. I guess Switzerland did some cash injections or equity injections early this morning. Do you think, what are the long-lasting effects? Do you think there are any big winners, big losers, or is there any way to trade that?
Well, I think that's a good question. I would answer that in a couple of ways. Number one is I think it partially comes down to will the plan work? I mean, as I look at the plans, what it really kind of summarizes itself as is that they're just shifting risk around, and they feel like that the market participant who is most able to handle the risk right now is the governments. So if they are, if that's what they're doing, then and they're successful at it, which I think is really iffy, but if they are, what's likely to benefit the most? I think financials, and in turn, if that does in fact work, I would see a recovery, a little bit of a recovery, at least in equities. That is probably good for short yen positions, which means that we'd be trading the dollar yen to the downside, buying puts and such. Conversely, however, if it doesn't really work, I think we've got a much longer trend of a stronger dollar in our hands. And if I had a gun in my head and I was being forced to forecast for the next 2 years, I'd put my money on the dollar, because I think that they're probably not going to be as successful as they want to be, and ultimately that's going to continue this flight in quality, which is going to drive the value of the dollar. I would not be surprised to see the trend over the last 3 or 4 years get reversed on the dollar and see a very strong dollar here in a year or two.
But okay, that makes sense. But against the yen, I mean, it seems like the other five are all moving. As you said, the dollar is this very strong currency, but the yen is even stronger in these periods of economic weakness. So you would think that what would happen then if we are successful? You think that the dollar yen would actually move back to 105 or 110 or some other number? Is that right?
Right, and the reason why I think that is because it's recently, or for the last while, it's been kind of that contra currency. It doesn't always necessarily trend the same way, or its relationship with the dollar is not, I find, in the same relationship that other majors have, because of this. We have this long outstanding balance of short yen positions out there, right? Because it was used as the currency to fund the carry trade for so long, or major components of the carry trade for so long. And so I think that if we see more safety in equities or lower risk in equities, then that's just representative of a higher tolerance for risk, and we'll see those yen shorts continue to add to those positions, because the yen, they're still not going to be able to raise interest rates. It's still going to keep those underlying fundamentals of the carry trade specifically in play. So I would anticipate that we'll see a weaker yen if the dollar gets we'll see a weaker yen if equities start to recover.
Do you think that the yen will ever start to trade more like the dollar? Because it seems like in the last couple of weeks, the only country that was willing to inject any money in the United States was Japan. So let's say they inject more money into other banks, or they buy General Motors or other industrial companies. Do you think that the correlation could actually sort of move the same way as opposed to a contra correlation?
I think it's possible. I would say that I would say that the impact that diversification efforts in Forex reserves or FX reserves or central banks in Japan or China or wherever, I think the probability that they would do that is pretty remote compared to the other factors that would strengthen the yen, which would be a continued weak trend in currencies. If we continue to see weak currencies, weak equities, right, then we're going to see short yen positions continue to cover. That's going to strengthen the yen, and that's going to drive the dollar yen to the downside.
Gotcha.
I would say so. So yeah, I think it's a factor, but it's probably nominal compared to the more urgent situation of where's risk going.
Right. I guess my question would be much longer term. Do you see Carl's question? It's somewhat lengthy. Do you want to take a quick read at that? Talking about
sure. Let's see. Let's see. I've noticed on the COT, the commercials, not the large traders, are carrying parabolically net shorts. Usually due to they are.
I guess you want to comment on the commitment, traders, the net positions and how you use that. I know that you've spoken about that in some of your live presentations.
Yeah, yep, that is something that we look at, but we typically look at traders in the aggregate. My experience is I'll look at traders in the aggregate rather than splitting them up into kind of the reporting categories. I do think, however, and I think this is one of the points you're trying to make, Carl, is it seems that we've reached these extremes. So we've got a lot of, for example, a lot of dollar longs out there right now is what I'm seeing in the COT report. Just about everybody seems to be long the dollar. I think it could be. I don't know that I would associate anything with the holidays. I don't know that there would be any adjustment for the holiday season, but. And until we get a break in risk out there, which just based on the volatility I'm seeing today, I don't see a big shift in institutional investors as far as the CFT report goes. And I'm not sure if I'm understanding your question completely, Carl. So if you want to follow up with me later, that would be just fine. But
John, one other question about the Australian dollar, and I've read at a couple places that people are speculating that Australia has lost a lot of money, I guess an inordinate amount of money during this crisis. Do you think that there's any credence to that, or you think it's really just big hedge funds having to all get out of their positions, forcing this the Australian dollar down so much, or do you think there is any sort of possibility that Australia as a country lost a lot of money because they leveraged themselves?
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.